Guys, CapitalCode back with another video. As you guys know, these days that's what we do. We post every single day. You know the vibes. So today's video is not gonna be that long. I'm just gonna show you guys the trade that I took on Friday. As you guys know, Friday was an NFP day. But I didn't trade that much. I just traded for I just traded like the early morning, so I didn't want to risk it too much because during NFP the market doesn't move that much, and it moves that much. It's just that it's too spiky, and because it's preparing itself for the NFP. So this is the trade that I took, and yeah, man, as you guys can see, I took the AUD trade. I want to explain it. I don't want to explain it first. I want you guys to see it as I was taking it live. So I'm gonna play the video where I took it live. So I'm just gonna fast forward it, and then you guys can see that I'm actually not lying when I say some of the trades that I actually take them. So it's not like I'm lying or I'm just saying these things because I want views or anything. I'm just showing you guys how I trade my life, the challenges that I go through, things that are just like things that we see as traders in the market, things that affect us, and I want to share with someone else out there so that everybody just know that they're not alone. So yeah guys, I'm just gonna play the video very fast. I don't want the video to be long, so I'm just gonna play the video first and then you guys can see. So yeah guys, as you guys saw the trade didn't even last that long. I think it took like a few minutes, 30 minutes or 45 minutes, and the TP was hit. 45 minutes or an hour, the TP was hit, and the whole time I was watching the trade. So that's why I was able to catch the trade. So as you guys can see, this is the trade, yeah, and this is what I saw. Let me just analyze it for you guys real quick. I don't want to waste any time. So as you guys can see, the market has already played out. So it's another day, the market is not moving. It's a Saturday, but like yeah, this is what I saw. Excuse me, this is what I saw. So the market was actually going up. As you guys can see, the market was going up since from the bottom it was going up. You get me? So this is what actually happened. It was just going up. So I just knew, okay, this is an uptrend. You get me? And from there, as you guys can see, if you guys go back, I don't like looking way back, but like you guys can see from the current market that the market was going up. So before I could identify anything, I saw, okay, the market is going up, so it's an uptrend. So now I'm just looking to take demand setups. I'm not looking for supply setups. I'm just looking for demand so that we can go with the trend. You get me? So this is what actually happened. The market went up. So as it was going up, I was looking at this high. As you guys can see, it created a high, and then the red line that I just draw, it was the high. It was a higher high. So after that, it went down, and then when it went up in a very impulsive way. And then when it was going up, it broke the previous high. So from there I knew, okay, since when it broke the previous high, then there's a high chance for me to look for trade. Then after identifying that it broke the previous high, then I saw this I saw this demand zone. So I was like, okay, cool, I can see the break of the structure, which is the break of the previous high, and I can also see that the market left impulsively to break the previous high. And then another thing that I saw is that it left a demand zone. So it's like, okay, let me identify the demand zone, which is this one. Let me remove this one so that I can draw it again so you guys can see. So I saw this demand zone here. So it's like, okay, cool. And another thing, the demand was never touched ever. So the market went up, didn't come back to the zone ever. It came back only once. So one thing I like to look at the market before I get into the market, or before I identify the supply zone or the demand zone, I look at whether this demand was used before. So if the demand was touched somewhere here, or it was touched maybe with the week, I wouldn't take it. I'm gonna do a full-on video. If you guys want to see a full-on video, just comment down below. I know I don't have a lot of subscribers now, just a few, but like yeah, if you look at it, if it was touched with a wick, there's a high chance that in the lower time frames, which are the 3 minutes, the 1 minute, there's a high chance that the zone or the area was touched before. So that's why I don't take those trades. I want a clean upside so that I always take high probability trades, you know. So as you can see, the movement to the upside was impulsive, and then I identified the zone. I was waiting for the market to come to the zone. As I was waiting for the market to come to the zone, you guys can see the market, it was busy spiking up. It was playing in the zone. So I identified the liquidity zone. So liquidity zone is where a zone whereby it's touched multiple times but can be broken, and there's a high chance that on that area there's liquidity, and the big banks and everybody's just trying to catch people from that area. So the area is liquidated. There's a lot of people who took trades at this area here, and a lot of them got stopped out because let's say this is the first touch, obviously went up, came for the second touch. Many people would have went in because it's a clear buy, because they're trading resistance, which is not, I'm not saying other people's trades are just other people's strategies are bad, but like that's what that's how I see it most of the times. So after the second touch, people would have went in, but the market went back to that area and took a lot of people out, and then others would have went in on the same area going up, and then it came back, took other people out. So I knew this area that I've identified here with the red line, this is the liquidity area. So the liquidity area is where there's a lot of people that are entering, and there's a lot of movement or a lot of spikes on that area. That's the liquidity area. So I knew after that it's gonna come back, take people's stop losses, take people out his stop losses, and then it's gonna bounce on my area and then go up. And that's what exactly happened. So when it came back to the area, let me remove this thing so that you guys can see. So when it came back to the area, I waited for any reaction in that area. So as you guys see, the first touch, I was like, this is not a beautiful trade, but like, let's wait for it. And then after that, it showed me a green candlestick, and I was like, okay, there's hope. And then I was waiting for the break of that candlestick, so it broke to the upside, and then I entered here. I don't know why this thing is big, but like, my stop loss was here, and then why is it so high? My TP was here, so I just knew, okay, stop loss, take profit. And then as you guys can see, it went to the area, just came back to the area after breaking to the upside, came back to the area, touched, and it went up. As you guys can see, it even continued to the upside to show that it was a great trade. So it was a beautiful one. And then the other one that I identified was this one, but I didn't take the trade because it was around news and I didn't want to be in the trade. But if I was able to trade or be in the trade, it would have been a beautiful trade. As you guys can see, it came from here, right? Went here, came here, and then after it broke structure, this is the trade that I took. Continued to break structure, and then after it broke this structure, then that's when I identified this. That's when I identified this zone, which is the demand. I identified the demand, and then after it broke, I identified the demand because it broke this area here. After breaking, then that's when I knew I'm looking for demand setups, and then I drew this demand setup. It went up, came back to that setup. I would have taken this trade after this break of candlestick. After it broke this candlestick, then I would have been in the trade, and yeah, I would have been safe either way. Let me see, and I would have went out on this area. Let me see. Yeah, but I wouldn't have taken the trade because obviously it's just during news, and I don't like trading during news. So everything's just too spiky during that time, so that's why I didn't take the trade. I saw the trade, but I didn't take it because I knew it's during news, and I don't want to trade when it's news and everything is just too hyped up and spreads are opening up. So yeah, guys, that's the trade that I took. As you guys can see, I always implement the things that I talk about here. I don't talk about something and then don't do it, because that's just misleading people. So I'm just actually doing these things so that I can motivate other people out there, so to showcase what they can do, to just build a community whereby I can be able to say, I know I have good traders with me, and I know I have supportive people with me. There's no need for them to be close to me. They just can be on the other screen, and we can do what we do best and make money and chase financial freedom. So yeah, guys, that's the end of the video. Make sure you like, subscribe, comment, and do that good stuff. I didn't want to waste any time on this video, just wanted to explain the trade. And today or tomorrow I might do another video, but I'm not gonna post today because today I'm gonna post this one. So tomorrow I might do another one and post it that day, or post it the other day, or post it on Monday. So like I just want to keep the consistency coming and keeping the videos coming. So this was live trading with me, and yeah, this is episode 3 to road to profits. I hope you guys enjoyed the video. Make sure you like, subscribe, comment, and do what you're gonna do. CapitalCode signing out. Tango.